All right. Hey, everyone. Welcome to today's live stream. It's Jaden Sterling here. It is Monday, August 14, 2023. Hope you're doing great. Want to announce we've got some changes coming up, and I wanted to make you aware of what is going on. We are going to, we're doing away with our free subscription, free trial. We've been running with it for a while. We noticed people value what they pay for, and we have several hundred people in our software for free, but not really interacting, not really doing much with it. So we're just going to go right back to our model of pricing our software. Everyone has access to all the pro features and they're being updated. It's just tons of changes here. And I'm excited about it because we finally have our chief technology officer in the saddle full time. We haven't had that since the very beginning of our software. The first 3 years, Don was able to work with us a little more regularly than he has in the last 2 years. But now we find ourselves with the opportunity to have him full time. And I am super excited about what that means for our software, what it means for our interface, for just finishing up things like getting our app out there launched, getting the new website portal launched, getting the new website launched, which we did. That's the front-facing site to show all of our features, and people can enroll with our software. So lots of changes here. Last Monday, I announced that we are moving toward a B2B model. I've had some of you reach out to me. Thank you for those of you who have reached out and have shared ideas and contacts with me. I'm grateful. By the first week in September, we're going to roll out the marketing strategy for that. So we'll be ready to connect with anyone that you can send our way, basically like small to mid-sized companies. The more research we do, the more we realize how important it is for people to have a financial education, and employees feel more confident when they are more secure with money and when they know what to do with their money, rather than be so afraid by it and be burdened by a bunch of debt. So we're here to change things up. We're going to be a disruptor in that space, and we're excited about it. And we're excited to connect with the contacts that you all that you may have for us. Anyone in like personnel or HR might be a good starting point for us. We're not looking for the massive, large corporations. We're just starting out small to mid-sized companies that can bring in our training platform for our software, implement our courses to educate their employees, like money therapy and stocks for freedom, and then a weekly call to help people in a structured way to reduce debt, get the most of their paycheck, how to navigate benefits, things of that nature. So we're excited about that. Again, that'll launch in the fourth quarter of this year, but everything, our goal is to have everything together marketing-wise by September 1st. All right, let's get started for today's show. As you saw in the headline, the U.S. is facing a debt storm. Here's 5 charts that show the trouble brewing. I want to talk about this because it doesn't serve us to ignore what's happening. We're given this very different message versus what's really going on in the economy. And, I think this is just an interesting look at what's going on. So there's a couple things happening here in the commercial mortgage space. Warning signs have sprung up in rising credit balances, delinquencies, and other indicators. So 3 weeks ago, Standard & Poor's, Moody's agency, basically lowered downgraded the U.S. credit rating, and Moody's downgraded the downgrade of 10 U.S. banks this summer. So we're starting to see the U.S. had a AAA credit rating, and it went to a AA, I think a AA plus, just one tick below a AAA. Nevertheless, it was a downgrade. And that's never a good situation, right? There's a website, if you look up the U.S. debt clock, U.S. debt clock. This is an interesting website. I'll put the link in the notes for today of the chat, but here's the average U.S. national debt is 37 trillion, 701 billion, 188 million, 750. It just changes every second, right? So this is a massive number. And if you look at it in terms of the correlation between the federal tax revenue, 4 trillion, 4.6 trillion versus the debt at 32 trillion, the U.S. government essentially is bankrupt. You can look at it from the U.S. domestic gross product. 27 trillion is what we bring in, what we sell, what we have going out. Debt is 32 trillion. So this is not good. You know, the U.S. government has never really been good at keeping a balanced budget. We never hear of balanced budgets anymore. All we hear is of more and more printing money. And money going, to different parts of the world to fund war, right? The whole idea is the U.S. is a war machine. We've been at war consecutively since, I believe, 1972, 77, something like that. There's just been an ongoing war battle somewhere that the U.S. is part of. I just want to bring this to your attention so you can see, what is really going on here. Household assets, 156 trillion. Assets per citizen, 582,000. But then we get to the liability. And U.S. unfunded liabilities, $193 trillion. This is the big number to see. And liability per citizen, 575,000. So the U.S. is basically bringing that large liability number down per citizen. What is it potentially going to cost per citizen? I don't know how this is going to play out, but with the narrative around equality and of course you can't have more than others, I don't know. We're going to see how this plays out. What else do I want to show you here? I think that was it. This number here, U.S. bankruptcies, 409,406. Living in poverty, 43 million people. 43 million. This is at the U.S., 335 million population. 43 million in poverty. It's just incredible what is going on. And these numbers are going up dramatically. U.S. foreclosures, 110,000 foreclosures. I just think we got to keep our kind of eye on the... and then it's broken out to each state. So you could look at what your state is, how fiscally insolvent your state is. I was going to say fiscally sound, but none are. They're mostly insolvent states. And then worldwide, this is interesting too. The U.S. has the highest national debt. Look at that, 32 trillion. Look at China. Actually, China is on some level crushing it because their GDP is higher than their national debt. Interesting, right? And others seem to be more in line. Ours is way out of line. Way out of line, 32 trillion debt versus 27 trillion in gross domestic product. Public debt to GDP ratio, 91.9%. External debt to GDP ratio, 89.58. That's a big number there. So the lion's share of what we've got going on is in the U.S. is just awful. Let's see where Canada is. Canada is 2.2 trillion in debt. 1.7 GDP. Public debt to GDP ratio 128%. And that's because our population is so low, right? You got 38 million people up here. And it's just is what it is. Less people, less debt though, more on a higher percentage basis. Anyway, check that out. I'll leave it in the comments. So here we go. Let's go back to this article. I think it's important to take a look at this, especially this chart here. Private debt levels are rising at a staggering pace. Private debt levels are building fast and hit new records this year. This is the first time this has ever happened, y'all. Credit card debt just passed $1 trillion. First time ever. Credit card debt. That's personal credit card debt. Like that line is just keeps going up and up. Personal unsecured loans also hit a new record, notching an unprecedented $225 billion in 2023. An unsecured loan is simply a loan that isn't backed by anything, but it is backed by that person's signature. In order to get a loan, you have to endorse, sign the paperwork for that loan. So even though it's unsecured, it's secured by that person's good credit rating. And if they don't make payments on that, whatever that is, whatever was loaned to them will be taken back. That's just how it goes. Doesn't matter if it's secured or not. Secured works slightly differently. If someone has a secured loan, it's backed by some type of asset. So if they stop making payments on that loan, that their home gets taken away, or their maybe they put up a retirement plan as security, or maybe they put up, a boat or an RV or some type of asset, physical asset. If the payment stops on that asset, then what happens? It gets repossessed by the bank. And this is what is unnerving at this point, is this U.S. Treasury yield curve. I talked last week about we have an inverted curve. This means that short-term rates are higher than long-term rates. You can see it here graphically, very easy to see. 1 month rate is 5.54%. 1 month. So you have to understand that a lot of these unsecured debts, these revolving lines of credit, are based on short-term interest rates. So as short-term interest rates continue to go up, so do the interest rates on these unsecured loans and secured debt as well. So really consider, doing your best to pay your debt down. That's key during this time. I've been saying it for years now. Get as debt-free as you can possibly get. That way you can somewhat get out of their system that they've created, which is just rough. Housing market outlook, where to expect mortgage rates in 2024. We saw on Friday the average 30-year fixed mortgage jumped to 7.19. 7.19. The 7.19 is the second highest recorded by Mortgage News Daily since November. July, it reached 7.22. This surge in mortgage rates signifies another decline in U.S. housing affordability. For instance, a borrower who secured a $500,000 mortgage at a fixed rate of 5.99 in early February would have a monthly payment of $2,995, P&I, principal and interest. However, at this new rate, 7.19, that same borrower, same loan amount, $500,000, their payment is $3,391. And they're going to have on top of that PMI, private mortgage insurance, if they didn't put the 20% down. They're going to have taxes, pity, right? Principal, interest, taxes, insurance. Taxes have done nothing but go up because as these property values rise, so do taxes. And insurance is just, I've heard in California, tripled, Florida doubled. It's criminal what's happening in the housing market. Criminal, I tell you. I just can't think of any other way to describe it. It's just not good. Anyway, here is our new interface. I wanted to show you what we've got going on. I've talked about this a little bit. I will talk about it in more detail when we actually physically launch the site. But we want to hear from you. Please go to the stock forum and tell us your comments. Like, we want to hear from you. We want to know what you're thinking of the new platform. You like it, you dislike it, you want to see something else. Let us know. We would love to hear. One stock I want to talk about today, Evolve Technologies. I talked about it last Monday. It was Stock Rock of the Week a few weeks back. Great home run on this stock. Look at the chart. August 10th at 583, today at 819. Bam! Can you say that's just phenomenal? So exciting. 819, the stock is an absolute stock rocket. Here and now, you heard it from Sterling Stock Picker first. Have a fantastic week. I'll see you next Monday.